it's a cloudy picture, 2014, because the impact of Fed tapering, which is what everybody is concerned about, both within developed markets as well as within emerging markets, has yet to be felt. And there are obviously two views about that, that the scale of tapering is relatively modest and therefore ultimately is going to have very little effect on current equity market valuations, and that equities will continue to move strongly forward on a global basis. And there's obviously the alternative view is that tapering will not just suck liquidity out of the market, but also damage investor confidence. And clearly the ability of markets to move higher, for prices to move higher, is as much as anything a confidence issue as it is a macroeconomic issue. So I think as we get into this first quarter, we will know a lot more about the way the markets are going to react to that. I think North America and Europe, and this is very hard given the last 5 or 6 years for people in this part of the world, particularly in Asia, to perhaps invert their thinking. We're very used in Asia to thinking of ourselves as the fast growth nations, as the leaders of economic activity. And it comes as somewhat of a surprise to realize that actually the US and Europe have not gone away, that they are still dominant economies as far as the world's overall economic engine is concerned, and that those economies are beginning to recover. America arguably is a year or 2 years ahead of Europe in that, but Europe is now catching up. And you've got considerable signs of growth now coming out of where I'm from. For instance, the UK is bouncing back quite strongly. Germany has not faltered at all over the last 5 or 6 years. You've got a bounce back in the PIGS countries that people wrote off: Portugal, Ireland, Ireland particularly, Greece as well, Spain too. So Europe is beginning to show signs of life and to grow again. There are a lot of capital goods providers, manufacturers in Europe that are actually growing quite strongly at present. So Europe and North America, yes, are really contributing to global growth, whilst Asia struggles a little bit. There's been overinvestment in Asia. Banks are overextended, arguably, in China and actually possibly here in India as well, in terms of having made, over the last 5 or 6 years, perhaps some unwise loans. There's generally a liquidity tightening here in both India and in China, to reflect the fact that the banking sector has become a little overextended. So Asia's looking a bit tired, whilst Europe and North America are beginning to freshen up their game. So and I don't think this cycle is going to last for long. I mean, I don't think anyone in this part of the world needs to become suicidal over this. It's a short-run cyclical issue, but I think we'll find that 2014 will be just as much about the developed world as it will be about the emerging markets, which I think will struggle in the face, as I say, of bank liquidity tightening and also overall Fed tapering. Actually, one of the previous conference sessions, the one that's just ended, Professor Persaud was asked that very same question, and he answered it by saying that he felt there was a third leg to the gold bull market coming up, that i.e. that gold will rally again from these lower levels. And the argument runs that basically, clearly the fears over the global monetary system are not yet over, that monetary stimulus, particularly in this part of the world, is not yet over. Fed tapering it's not withdrawing new money, it's just reducing the rate at which new money is created in the US. So all of those factors mean that money is still being debased, and that therefore gold will have yet one more leg up in the not too distant future. That is his view. I have always struggled personally over a 30-year career to see the point of gold.
Okay.
And so I've never, and I'll put my cards on the table, I've never been a gold bull. I don't personally see that gold has any underlying intrinsic value. It is a commodity that reacts to market sentiment, and if you are clever and can trade that market sentiment, then you can make money out of gold. I have never known anyone do that consistently over the long haul. So, my personal bias is to leave gold well alone. I know here in India that is possibly a very contrary view to take. I understand gold buying here in India is actually at record highs at the moment.
Yes.
So I'm not going to go against 1.1 billion people. They probably collectively know more than I do. But I do find gold to be a sentiment indicator as opposed to anything else. And my sense is that the world is gradually beginning to stabilize after a very, very difficult 5 or 6 year period, and therefore I think the fundamental foundation that gold has had underpinning its rise over the last half dozen years is gradually eroding, and that gold will struggle to move forward from these levels. Bitcoins from circulation and from being used as a currency of account. Now maybe that's if you look at all the things that change in the world, they always start as being alternative. They're always out there on the edge, and so maybe over time bitcoins will take over a large percentage of world trade, but I think it'll be over a very, very long period of time. Whether you think bitcoins are or not a good idea, bitcoins have got some very powerful enemies. And the sorts of things that you were mentioning that have just occurred in China, where the authorities in China have spoken out against the use of bitcoins on Alibaba, for instance, which is the eBay platform in China, the eBay equivalent platform in China, I should say. I think you'll see other countries fall into line behind that. There's a federal case, I believe, against bitcoins in the US. Apart from anything else, I think that's still in the courts in the US, and I think you'll see that more and more throughout the world. That governments will seek to restrict or to exclude bitcoins from circulation and from being used as a currency of account. Now maybe that's if you look at all the things that change in the world, they always start as being alternative. They're always out there on the edge, and so maybe over time bitcoins will take over a large percentage of world trade, but I think it'll be over a very, very long period of time.